Woo, that was a bad day in the market. Tesla down decently compared to the rest of the market, compared to NASDAQ, S&P 500, and Dow. Tesla definitely took a beating today. So we're going to talk about that today. We're going to talk about potential red flags that may not actually be red flags anymore when it comes to Tesla, especially now that we got some Shanghai numbers out. And we're going to go ahead and talk about what might be happening the rest of the week and next week with regards to Tesla and macro and everything else, and what you should keep an eye out for, okay? If anything, I think there might be some good news here. Maybe it's low hopium. We'll find out. Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. All right, before we get into today's episode and we start talking about Tesla, got a few things to talk about. Number one, check out this link that I'm going to leave somewhere here. I forget which side it goes on. This is a video that we did with Dave Lee, James Douma, and Farzad. We go over Dojo. We go real in depth about it. It's about 4 hours. It's really probably more about 3 hours, I think, long. But if you have any questions about Dojo, if you really want to understand what it is, and I recommend you should really try to understand what Dojo is, what it's about, how it works, what the implications are, because if you're an investor, you should know what you're invested in. Check it out. I think that we did a pretty decent job to the point where anybody will be able to understand it. So shout out to Dave Lee and James Douma and Farzad. Again, I'll leave the link somewhere up here. All right, number two, stay tuned, okay, on what is it, October 19th. October 19th is Tesla earnings. We are going to do quite the live stream, okay? So again, I'll leave a link here. You can just sign up on my YouTube channel and you can get reminded about it and you can watch the earnings from there. But essentially, it's gonna be a mega stream. All right, we got people like Gary Black, Ross Gerber, Alexandria Mers, Farzad, myself, Yashu, Dave Lee, Matt, Good Soil. Everybody's going to be on there, right? So there's going to be a lot of people. Some people will be coming and going. It's going to be a great time. It's going to be a long evening. But hey, we're all going to do it together. We're all going to be together. And one way or another, we'll support each other. Last thing, if you guys want, feel free, check out the merch. Right here, we got a Fremont, Shanghai, Austin, Berlin. If you guys want, you can find it in the store down below. And last but not least, I want to give a shout out to our newest Patreon member, Del Spiva. I think that's how you say your name. Welcome to the group. I appreciate your support. And with that said, let's get into this. Let's talk about Tesla. Let's talk about the potential red flags. All right, so as you all know, it wasn't that long ago that, well, it was maybe a couple weeks ago, where we really start to see this theory start to emerge about Tesla China having demand issues. Now, this first kind of started off whenever Tesla was given an incentive for people to take deliveries by giving a discount on insurance, right? And then this kind of snowballed and became more and more of a rumor as we got the actual delivery numbers, the total delivery numbers for Q3 for Tesla. And the reason this happened was because the numbers were actually 20,000 lower delivered than what had been expected. You see, traditionally, what we've seen with Tesla is that whatever they produce, whatever they deliver is really close to that. Sometimes they even deliver more because of the previous quarter. So this time we saw this big delta, this big gap of about 20,000 vehicles. So everybody just assumed, okay, this means that we have demand issues in China, right? That's got to be where it's coming from. Well, hold on just one second, because while everybody feared that, and we actually saw the stock market react to that pretty violently, and you can say that the stock market reacted to other things, to macro, to Elon and Twitter, to this. I mean, maybe it was all of it, who knows? But we do know that the market reacted and did have some kind of influence on the share price. But anyways, getting back to it. So we saw these rumors, these fears that, you know, on the surface with the data we were getting, it made sense. It did. Right? I was cautioning, you know, don't get too braggy out there. Don't start poo-pooing on other. I hate when people say poo-pooing, but I just said it and I said it twice. Don't poo-poo on other companies like Ford and GM for having issues, supply chain issues, inventory issues, because you never know when it can happen to us. And we don't really know what the deal is with Tesla China. But with that said, we got some numbers today. Well, it turns out that Tesla at a Giga Shanghai for September only exported about 5,000 vehicles, which means out of the 83,000 vehicles that they delivered out of Giga Shanghai, the rest of those, so 5,000 minus that, so about, what was it, 78,000 vehicles were delivered locally, domestically in China. That was the second best month of deliveries compared to, what was it, June? I think it was June. Second best ever that Tesla China had. Interesting, isn't it? To me, this just proves that there's no demand issue with Tesla China. So to me, that red flag is essentially out of here. So why are we still routing? Why are we still going off? I mean, I remember I was listening to a live stream with I think Tesla Herbert, and he was wondering whenever we got the upgrade for Tesla's credit rating, well, why is the stock going down? Why aren't we seeing a reaction to this? Why aren't we seeing a reaction to the good Shanghai numbers? Why didn't we see a reaction to Berlin opening up? Why didn't we see a reaction to Austin opening up? Why do we keep getting all this good news out of Tesla and there's no good positive reaction? Well, hard to say. It's really hard to say. That's why, one, I'm a long-term investor. That's why this channel is about long-term investing. And, we talk about engineering stuff here and there. But really, it's about the bigger picture. 5, 10, 15, 20 years down the road. And when it comes to that, I can almost guarantee you, now this is financial advice, that over the long term, Tesla, the company, the fundamentals, the financials of the company will win out. Right now, in this short term, and this is short term, don't be fooled. I know it's been a tumultuous, essentially 1 year, right? Since last November. Last November is essentially when this whole route started with the stock price and Tesla and the economy and the macro and everything, right? And it only got escalated in February when Russia invaded Ukraine. It only escalated again as the Fed kept raising rates and inflation kept going up, right? It just kept escalating. But the point is, this is the short term. It hasn't even been a year that we've been dealing with all this. This is short term. This is noise. All right, this is not a true representation of what the company is. The company's over here, the stock is over here. The company is affected by the decisions made within the company. Everything else here, the stock price, is influenced by macro, by inflation, by wars, by governments, by et cetera, et cetera, et cetera. The company is doing fine. The company has no debt. The company is probably going to have record margins. The company is ramping up two factories fairly well, in my opinion. Shanghai still has great demand. All of Tesla still has great demand. And they seem to be the only auto company that any of the analysts are really giving any good credence or feelings about, whether it's Goldman Sachs, UBS, JP Morgan, Chase, you go on and on. The only company, automotive-wise, that any of them seem to have any confidence in right now is Tesla. Some of them are feeling confident about GM, so I will give GM some credit there. But in my opinion, GM has not produced anything. They have not delivered anything of meaningful volume or quality or margins or anything, right? So when it comes to GM, in my opinion, they're still second place to Ford. And Ford is capitulating like crazy. Analysts seem to have lost complete faith in Ford. In fact, with this new EV tax credit that we're going to be getting here come 2023 or January 1st, 2023, seems like everybody's saying, okay, we were bullish on Ford. Now we're saying, see you later, Ford. We're going for GM because they have at least been trying to localize their battery supply to the States using their Ultium platform. Either way, I still don't think it's going to help them. I don't think anyone's going to be able to catch up to Tesla. I think, in the words of Stephen Mark Ryan, it's an unassailable lead. Okay, so what happens from here? And what potential good signs could we be seeing? Well, I'll tell you one last potential bad thing that we're seeing, but could be construed as good. Okay, the Bank of England is yet again essentially bailing out the UK by buying these bonds back. Okay, we don't need to go too deep into what's happening there. The big thing that you need to know is this is a big issue. All right, I believe the UK is the 5th largest economy in the world. I could be wrong about that, but I'm pretty sure it's large. So if something happens there to their financial system, that will have widespread implications. It's not like China, which would have less implications, even though they're second largest economy, because they essentially keep a lot of the Western world out, right? In China, they are very limited on who they allow to buy their assets or get involved in their economy. But with the UK, that's a different story, right? They are just like the rest of us, right? All about globalization. And in this world where everything's going away from globalization, they are not in a good space. Okay, so well, why is that potentially good news if it could send ripple effects and has these fears and these talking points of a Lehman Brothers type moment yet again, right? The 08, 09 issues that we saw in the United States. Why is this potentially a good sign? Well, hear me out on this. If there's enough cracks in the world macro economy, if there are signs that what the Feds, not just our Fed, but the Feds around the world are starting to really have an impact on the global economy, this could send a lot of the Federal Reserves to start slowing down what they're doing, to take the foot off the accelerator. And I think if we start to see some meaningful signs, or even little signs, to be honest, of inflation easing up here in the United States, I think we'll see the Fed back off. I really do. And I think this Thursday, we'll get CPI or inflation readings from September. So remember, it always lags, right? It's the previous month. So whatever happens in September, we'll know what those inflation numbers look like on Thursday. I think the market's freaking out about this. The market's very paranoid. But at the same time, as long as it's meeting expectations or below, I think the market will be fine and will rally. Now, there is, I think we're almost at this contagion point where there's almost more, the odds are just so much greater for good news to come through, right? We have such a bleak outlook on the macros in the world and everything. We have such a negative thought right now about inflation. But today, the Fed survey came out, I think it was the New York Fed survey, asking everyday people, what do you expect inflation to be this time next year? And for the first time, we saw it lower. It's the first time we've seen it lower in a long, long time. So we're starting to see some better feeling within people. And you got to remember, a lot of what the Fed is doing, it's not just about getting inflation down, but is about people's sentiment and them not believing that inflation is going to be higher next year. Because at the end of the day, whatever the mind thinks will happen out in the economy. You better believe that, right? If people think that we're going to be in a recession, well, people start to react like that. And guess what? We fall into a recession. Same happens with inflation. If people just expect that this is the new normal and that's what the Fed doesn't want, well, then people will just expect that and they'll pay more for things and they won't worry about saving. They'll just put things on credit card and we just start piling up these issues until we have yet another problem down the road, which still might be the case with car loans, credit card debt, student loan. I mean, right? You can go on and on. But the point is, we might be at peak bad news, at peak fear, to the point where the only logical thing to do is pendulum swing the other way. And if that's the case, if we're getting close to that, which I have to believe we are, if for no other reason, look, we know what the Fed wants to do for their Fed's fund rate. So we know there's going to be a 0.75 basis point rate hike that's essentially baked in, unless the CPI number is really good or we see more cracks in the world and CPI numbers really good for us, then maybe they do a 50 basis point. But right now, the market's predicting a 75 basis point or 0.75%. All right, so they go ahead and do that. Then they have one more in December, which will not be a 75. It'll be a 50 basis point or 0.5%. And then in 2023, they expect another quarter or a 25 basis point or 0.25% rate hike. But my point is, we're nearing the end of this potentially, at least based on what the Fed has indicated. And we know that a lot of we see deflation happening, right? We see it everywhere. Like, you have to be blind not to see it. Rates are essentially at 7% for mortgages. We see rents coming down. We see home prices coming down. We see commodities coming down. We see metals and minerals coming down. We see manufacturing coming down. We see all of these retail stores with so much inventory, which guess what's going to happen? That means they have to cut prices so that they can get inventory out and people come and buy. We're seeing this. What we're not seeing is all of that trickle into the numbers, into CPI, PCE, right? We're not seeing that yet. So so eventually it's going to happen. We just haven't gotten to that point yet, which is why everybody like Cathie Woods, Gary Black, Elon Musk are kind of hammering on the table saying, guys, Enough. Stop. You're doing the wrong things. You're being wrong yet again. You were wrong before, you're wrong now, and they keep hammering on the table about this. So maybe the Fed wakes up. Maybe those numbers start to come through on Thursday's CPI report. Maybe. Either way, even if it doesn't, as long as we don't have a horrible number, I think we know what the status quo will be. 75 basis point, 50 basis point, 25 basis point. And then they're going to pause. They've already indicated that. So as long as things don't get worse, if you will, which it doesn't seem like it can because there's so much destruction in the economy, not just here, worldwide. And that's the other part that you have to take into account. We every day, or what we see in the news, we see the impacts of our Fed raising rates. But it's all the Feds all over the world are raising rates now. And you got to understand that that also has ripple effects, and that will eventually make its way through the numbers as well. So at this point, again, none of this financial advice, but I think the best thing anybody could do right now is weather the storm. It really seems like right now, it seems to me like we are maybe in the eye of the storm and we're about to go out of the eye. And yes, that is still rough weather, but it means that we're more than halfway through this. It means that we're close to the other side. And here's another way to think about this that might just make you a little bullish, a little optimistic. We were bound to have something like this happen, right? Doesn't mean you have to, but inevitably, right? Life is cyclical. Markets are cyclical. You have good times, you have bad times. Without the bad times, the good times aren't as good, right? It's just the way it happens. You have happiness, you have sadness, right? All this happens, right? Life balances itself out. Right now, we're going through the bad times. Right now, we're going through the downturn. But eventually this ends. And then we get to go back to the good times. And at least when you get back to the good times, you don't have to fear about another bad time happening probably for quite some time. So I like to look at this as a healthy correction, something we needed to create a base so then we can go up from there. So that's my spin on hopefully something rational. Hopefully this video put a little brightness in your day on an otherwise pretty bleak market day. But hey, let's get through the CPI numbers. Then let's get into next week. We'll see the earnings. And don't forget to tune in for our live stream. Again, it's going to be a just who's who of Tesla people on this live stream. So I'm very excited about it. Very honored to be part of this. But check in for that. Let's see how the numbers go. It seems like Tesla is going to have a very good quarter. Sure, they didn't hit the delivery number that the analysts wanted, but I bet you they still beat on the numbers. And I bet you their margins still beat. And I bet you Elon and team have good news to talk about, right? At this point, in my opinion, I don't think Elon's going to say anything or risk anything to let Tesla stock price go lower, especially with the impending Twitter deal still hanging over him. All right, we're going to leave it there. Do me a favor. If you like this type of content, hit the like button, hit the subscribe button, or ring that bell. Love you all. Peace.